That's working. That's working. Now, I'm going to try this one more time. Going to need my glasses. No, still not working. It is. Well, let's see who is here this evening before we started. Now, just getting warmed up. Here we go. Good evening, everyone. Let's see who's here tonight. So, who do we have over here? Day today, my first burn selling a cash secured put. Dom, tell me what it was. I want to take a look at it. So let's go over here. Who do we have over here? Dominic. Good evening, Dominic. Nigerian. Good evening. Ruben. Dojo. Nini. Roger. MMG. Krebs. Dan. What's happening, Dan? Arturi. Okay, whatever. Deanna. Roland. Austin. All right. Christine. Good evening, Christine. Brian. Okay. Priceless. Zeke. Rob. David. Robert. Afterburner. Dusty. Cincinnati. Babalu. No. Bob Lambo. I like Babalu better. Will. Crazy Lucky. Tom Penna. Tom Penna. Good evening, Tom Penna. Timothy. Good evening, good evening. What if I get called away from a losing position? Kev, you shouldn't be in a losing position in the first place. However, you should always keep an eye on your positions and see where they are going and how are they performing. It's always going to be about the numbers. If your stock is going back, make sure tonight and have any key level. Much better to me. Because if you made $13,000 today, you're up $13,000 from when? From 10 years ago? So 10 years ago you bought something and you made $13,000 off of it, and 10 years later, doesn't impress me at all. Okay, you have $3.5 billion and you made $13,000 trading that today. That doesn't impress me at all either. You're missing out a lot of parts of the equation. Now, for some people, I like percentages, and I like beginning dates and ending dates. Are you up $13,000 for the day, like you jumped in? Kevo, Danielle, invest in the S&P index. I'm going to say no, Daniel, only because you're new here. It's not what I'm looking for. Definitely not what I'm looking for. Austin, thank you. Easy Meat, good evening. Good evening. TMC, David, what is? Oh, hold on a second. You did it on Abbott Labs. You said it wasn't a good move, but I chased the premium. I'm in BT. Let's take a look. ABT. There it is. Which direction is it going? Up, down, up, down, up, down. Big gap down and a big drop. Now, okay, we zoomed into this and say, well, look, here's the 30-day bottom. Here's the 30-day top. This thing is dropping, looking for a new bottom. So you did a cash secured put on this. Now, see, the interesting thing about cash secured put, well, I'm not going to give points now. It bottoming out on Tuesday and Wednesday being a higher day. And we were looking to see if we were anticipating it being, Wednesday was a little bit higher. So and it just kept on dropping. So a cash secured put, it depends on, did you buy or did you sell? And what did you buy and what did you sell? What were you anticipating? Okay, we were anticipating that it's going to find a bottom eventually. Now we thought maybe Tuesday. Well, we were wrong because it dropped down again. So it is what it is. So this is a good sign right here. You got a gap down like this and a big drop like this on a company like Abbott Labs. Well, tomorrow, more than likely, if she opens up a little higher than this 120, that would be a good time to jump in, because usually I wait for attention to this number right here. It's R. Well, let me just see these numbers right. Oh, wait a second. Before I forget, money safe, predictable, consistent 1% per week. Now, I came up with a strategy designed specifically for my 9-year-old daughter back in 2008. Well, that was, 14, 15, 16 years ago? Teach a 9-year-old how to invest in stocks when most adults don't understand it. The strategy had to be simple It had to be safe. Profits had to be predictable and consistent, and then there was no way that she could lose. So those are the criteria that I had to overcome when designing a trading strategy for a 9-year-old. Okay, thing you don't want to hold on to for a long period of time. You don't want to hold on to it in 15, 20. That is supposed to go towards you continuously profitable. That one boggles my mind. Okay? So, I forget where I was going with that example. Hey, I have user 9618. Hey, Dominic, I can't help you out with Abbott Labs, but what I can tell you is anytime a stock drops like this with a big gap and a big movement, take a look at this. D is the date. O is the opening price. H is the high of the day. L is the low of the day. C is the close of the day. And look at that. R, that is the range. How much does the stock normally move? Well, let's take a look at what it normally does. So for that, we just take my little cursor, okay, and put it on any one of these little candlesticks, and it'll tell you what the movement was. Okay, 30 days ago. Wait, that's not 30 days ago. 30 days ago would be the 17th, right there. Here we go. 30 days ago. How everything is 86. It's not a lot. Okay, and then $1.30. The average is under 3 or 4 and 9 cent move from the blue line, the blue back here. You think it should be a better view? Just so. This is the information on the stock right up here. Okay, the last price was $120.51. Bid, ask. The difference, give it this way. Okay, we all have a corner store. Okay, Circle K, Quick Stop, Quickie Mart, 7-Eleven, whatever it is. Whatever store is right around the corner, you just go there, quick little convenience store. The farmer and they says, yo, I need some milk. Sell me some milk. So when me at $3.50 a gallon. How many? Same thing with stocks. The difference between for that price. Well, great. How many times did he do it today? Today, he did it 27,560,000 times. Now, usually during working hours, the spread is about 1 to 2 cents per share. So 1 to 2 cents times 27.5. This out. Here's Abbott Labs. This is for the year. Here's the high of the year. Here's the low of the year. This is where we earnings, dividend, earnings, dividend, earnings, dividend, earnings. Look what happened today. We're going to zoom into that and show you what dividends and earnings can do to a stock and who benefits from it. That's the big one. That's the big question. Last 30 days. Blue lines right down here. They represent, right there, 25th. 9 shares. Trade you are. Come out, wherever you are. So now, average movement is 5.6 million. Okay. Now, if the market maker is getting 2 cents a share, well, what is 2 cents a share? Now, it doesn't sound like a lot. 2 cents a share, but the average, every single day, average over 5 million shares. 2 cents, and multiply it times 5 million. Okay, so, based on just pure math, 2 cents a share. Okay, next time you're buying or selling, look at the bid, the ask. If you're buying, you're paying the ask price. If you're selling, you're collecting the bid price. The difference between the two is called the spread, and that volume. Okay? 5 numbers. Only one of them, only one is created and manipulated by one person. Yeah, the market maker. Now think about it. High, well, we decide what's high and what's low. Because if we keep buying, the price goes up. We decide that. If not, how much to buy, how much to sell. So open is controlled by the market maker. It's the only number. Okay? The opening, controlled by the market maker. The high of the day, we figured that one out. The low of the day, we figured that one out. The close of the day, last one across the line, creates the number. And then the volume. All that's created by us except one. That's the market maker. He decides where to start out with. So I'm going to show you something that's going to piss some of you off. really to the market maker. Here's the dividend. I can't really read it. What the hell does it say? He decides what to open the stock at. Now, let me paint you a picture here for a second. Now, Monday, Tuesday, Wednesday, Thursday, Friday, whatever, blah, blah, blah. Okay? This is Thursday. Monday, Tuesday, Wednesday, labs. Check this out. Or we did not make our goal. Okay? Maybe they were expecting to make, 40 cents a share profit. I don't know what it was. But we did not make our goal. 5 words. The market maker takes that information. What does he do with it? He decides. He and he alone. That's what it is. He and he alone takes that information. We did not hit our goal. And then he decides, yes, put it up. Gap it down. And what happened then? Today, all right, let's clear this. 27,550. He gets a little piece of paper, 5 words. We did goal. He's the one who says, you know what? We did not hit. And all of a sudden, how many? I keep forgetting. What is that? 70 million. Oh, wait a second. 27 million. But Labs, I got a phone call from the CEO. Hey, our stock dropped. Don't come to work. No. The stock price has really nothing to do with the company. It's just our perception of what we think. Okay, so we think it's worth this. The market maker gets that little piece of paper. We didn't hit our target. Well, great. Tomorrow, and doing the same thing they did today, and the same thing they did yesterday. This got nothing to do with anything other than the market maker manipulating the numbers, saying we didn't hit. It makes on average 100,000. You got to be leery of that one. And you got to think of it. It's kind of. Well, it is manipulation if you think about it, because the market maker is the only one who decides. The low, that's us. The volume, that's us. Anyway, I do find, so what we don't know, okay, those 27 million shares that traded today, were those buyers or were those sellers? Okay, never sell at a loss. Company, she is in a position where she should be going buyers, or is that sellers? Market maker got some information. He drops the price, tanks, everybody panics. 27, he walks away with 550,000 for the day. So much for that weekend in Paris. Let's go. Whatever he's going to do with the money. And it's all legal. Isn't that weird? So TMC, let's take a look at it. So I'm not quite sure what you did with Abbott Labs. Okay? Because it says this, I'm in for 5 contracts at once. As a matter of fact, I'm saying, all right, so here it is, and you're in it at 129, and now we're at whatever the hell we're at. I really don't do cash that's going to drop, and we knew eventually there would be a bottom. We didn't expect this. This is one of those things that just happens. Not quite sure. Rich, as a very inappropriate question to ask Friday the 29th, 129, hoping for a bounce. Oh, it should bounce. Now, the interesting thing, Dominic, you can roll that every single week until you to buy it. And like that, in a big drill over at Abbott Labs. No, he wants to go in. He doesn't care about the stock price. I mean, do you just go in there, punch your time clock, do your job, go home, kiss your husband, kiss your wife, hang out with the kids, that type deal. Well, that's what most of America does. We get up in the morning, we go to work, we put in our 8 to 10 hours for the day, and then we go home. We spend time with our family. Most of us don't really care about the stock price at the companies we worked at. As a matter of fact, I'm 61, which means I have done a lot of different jobs. Now, I'm not one of those who got one job. No, my brother-in-law, he got one job in high school, and he still works there, and he's older than me. My uncle, right out of college, he got a job with International, I think it was International Paper, I'm not sure. But he worked there until he did his own business. But that was all he did all his life. Well, waiter, cook, I've done a lot of things. And not once, ever, have I looked at the stock performance at the company I was working at. My main concern was, what am I going to have for dinner tonight? What are we going to do? Okay. Oh, wife wants me to stop picking up milk and diapers. Nope. keep on going. TMC. David wants to take a look at TM. Well, I hope you found that educational. Think about it. Only one number is manipulated or controlled by one person. And I'm going to leave it. That's what the market maker's job is. And you want to be a market maker, think $150,000 for the application fee. And you get information like this and you get $500,000. Class MC. What the hell is TMC? Okay. Last year, which kind of gives me, how can this thing possibly have 20? It does. I seriously doubt it. But anyway, look at numbers. Okay? Me personally, I'd never buy at the high. I'd buy it, where it's low. When is the last time someone says, hey, want to make money in the stock market? Buy low, sell high. Well, what happens if it's at the high? At $7. You can do things back. I don't buy at the high. What are we looking at? Okay. All right. Johnny Fani, XRP. XRP is not a dividend stock, brother. And it's not even 20 years old. Thoughts on ULT? Hunter Shaw, ULTY. Try it again. ULTY. No. Wasn't that quick? Now, when I look at its stock, first thing I want to look at is the 1 year chart. Okay? Then is the 1 year chart. Okay? Then after I look at the 1 year chart, I want to see where is it now, number 1 year. Next, I want to take a look at, I told you the criteria: simple, safe, predictable, consistent, 1% per week. I told you the criteria: simple, safe, predictable, consistent, 1% per week. That's the criteria. Simple, safe. That's the criteria. Simple, safe, predictable. What's the criteria for the trading strategy? Well, the rules that go along with it. Rule number 1, never buy something not on the list. Okay, what's the list? Well, the list is only stocks that you like. Well, for me, different than from you, there's a lot of people out there, average between 5 and 25,000 people. Now, I'm broadcasting through 9 different channels. So between the 9 different channels, over 25,000 people come through every single night. Well, here's the thing. We're all different. We all have something different to look for. Now, when we're investing, well, we kind of have all the same idea. We want to take some predictable, consistent 1% per week. So, rule number 1. Never buy something that's not on your list. My list? Simple. Europeans. Dividend contenders. And then for the fun of it, I'm going to throw in Warren Buffett's list. Because old Warren is good enough for him. Well, the only reason I like them is because they're going to do that right now. We have not looked this week, so let's take a look. For that, Google. Because it is right. I really don't. Every week we check it out. We take a look. Now, you guys remember this? 10,000. Ready? 260. Goldman Sachs. 206 different companies we can invest in. And at 300. Why? Because only about 300 are consistently profitable. 2. Simple. I like my life simple. I don't like complications. 2 goals. You ready? 1. Consistency of profitability. I got to go back to work to replace that money. Because all the money that I have from my working life since 1973, my first old man's farm. He was a nice guy. All right? Very fact. The funny thing is, we are a couple of elementary. We're still in elementary school, me and my buddy, because he lived right up the street from me. And old man Simmons would pick us up right from the bus stop. We wouldn't even go home. We would get off. Some of you guys weren't even born then. Okay? But here's the thing. That was my first job in 1973. Well, I just retired in 2022. what is that, 50 years of working? Well, I think I'm entitled to retire. Now, I could go back to work if I wanted. It's $1,000 a week. 1% per week. 100 grand, 1% is $1,000. If you get 100 grand, well, 1% is $5,000 a week. Now, if you get 20,000, well, that's only $200 a week. But here's the thing. If you keep investing and if you keep getting 1% every single week, at 1% every single week, you can double. You need to get to that golden number. What is that golden number? Well, we're adults. We all know what our mortgage is. We all know what our insurance is. We all know how much we buy in gas. It's going to decrease. Your electric bill is going to decrease. Get them the hell out of the house as soon as they're 18. When my son turned 18, he had his bags packed. I had his bags packed at the end of the driveway. So, needless to say, he did go couch surfing for a while with all his buddies. It pulled himself up, got an apartment, him and all his, it was really cool. That's where they all hung out. And then, he is the man today. He is the man he is today. Well, because I wasn't his, you're 18, buddy, you're a man, you know. Anyway, side point. All right, 1,260 different companies to choose from. So how do you choose? Because you're different than I am. I'm looking for consistency of profitability to the moon, or have the possibility of shooting to the moon. Because that's not guaranteed. That's only speculation. Well, speculation's not going to pay my bills. I'm terribly sorry. But awesome. What do you mean, strawberry? New flavor? Oh, great. Yeah. You got two choices, only two, in yourself. Number one, take responsibility of your own money. Learn how to do it yourself. Or two, give it to someone else and let them decide what you're going to bring. Go ahead. Talk to a planner. Talk to an advisor. Listen to what they say. Oh, Mr. and Mrs. Smith, you got $500,000. Great. You got a 4% a year. That's what the normal average draw is. I couldn't do it. I take all the money that I have and I say, hey, give me 4%. I'd be back to work. Yeah, no. But 1% per week, that's over 50% per year. I can live on 60. All right. That's the only thing I use FinViz for. Okay? 10,260 different companies to choose from. How do you decide which ones you want? Mate, see profitability, weekly options. That's it. That's all right. Can we look at Humana? Ooh, I like Humana. I have Humana. So let's take a look at Humana. H-U-M. Ooh, you see that? Okay, it takes you it should take you 3 to 4 seconds to take a look at a 1-year chart. Where was it? Where is it? Where's it going? Down, sideways, down. It's not that difficult. You ready? High, low, was, is, down, sideways, down. Okay, that was like 3 seconds. Don't spend a lot of time if it's going to be a no. Now, I do what's called a covered call because it's buying a stock. It's a safe strategy, but there's no profitability until you sell something. It's not a profit until you sell something and take a profit. So what trading strategy can you do that is simple, safe, and the stock doesn't even have to move at all? It's the covered call. It's simple strategy. You buy the stock, you sell it for the same price you just paid for it through what is called tonight to show you how easy it is. So we're all adults here. We know how it works. Let me just tell you one thing. Set your mind at ease. I'm not going to try to sell anything. Now, we're all adults. We know how it works. Yep, up in the bio, whatever channel you're on, there's a bio there. Say, hey, this is James. Hey, this is his website. Hey, this is what he, blah, 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 all that kind of nice needs. You're going to get to a point in your life, okay? It may even be on your deathbed. Well, I think I should share some of the stuff I learned over my lifetime. I shoot a lot of videos because I feel guilty. I do. I feel guilty about what I know because I talk to a lot of people. Trust me, I do. I talk to everybody. I go everywhere. I talk to people. And I learn, they live in a tunnel. They don't know this. They don't know that. So great. Everything I know, I'm just going to blurt it out. It's like, hey, you want to learn how to do this? Great. Here you go. Want to know how to do this? There, here you go. You don't have to pay for any of it. It's all free on YouTube. Just go there and listen. Say, okay, 5 to 10 minutes a day is all it takes. But it's boring. But boring is profitable, consistent, and safe. So yeah, 5 or 10 minutes. Oh, I got a road. Woohoo! Thanks. Who was that? There is. As a matter of fact, it's so safe. So safe, you say, you can do it in your IRA. Guaranteed. Wait a minute. Approved by trading strategies out there that you cannot do in your trade in your retirement account, but you can a covered call. Now let me, because I just noticed my acid reflux. That's what the tea is for. My son Jacob was over last night. So I was a little late last night. I don't know if some of you caught that or not, but we were having fun. So anyway, he moves. He says, "Oh, damn, that hurts." I says, "What's that?" He says, "I never felt that pain before." I said, "Good." Acknowledge it and give it a number. He says, "What do you mean?" I says, "Because, yeah, as you get older, you jump and say, ooh, what was that?" Okay. So now as you get older, it's ooh and ah. And then as you get older, it's ooh, ah, ooh. And the older you get, they don't go away. They add up. So I said, "Jacob, you remember this?" He says, "Yeah, that's number one." "Remember this?" "Yep, that's number two." So next time, it's going to be, "Oh, where the hell did that come from?" And that's just another one to add to it. So every morning you wake up, it's, ooh, ah, ooh, It's just one on top. Now, you old guys, you know exactly what I'm talking about. Remember your grandfather? Okay, he'd make old man noises. Yeah, that's what it is. It's recognizing all of the. He slammed on my toe, and it's like every once in a while when the moon is in retrograde and it's just raining, I'll say that pain will show up again. Anyway, let's get back to where we were. All right, Humana. I like it where it is right now only because look at where it is. Here's the top, drops down, goes sideways. What's happening here? Now, right now we're at 223.55. So what does that mean? Well, I like Humana. It's on 223.55, which means get 222.50 or 225. 5 is going for 490. Well, look at the 227. That's going for 350. The 230 is going for 260. Almost 4 of them. Okay, so great. So if I pick this one here, now more than likely I do the 222 because it's a safer trade. 222, it's less. If the stock goes up, I make money. Stock stays the exact same, I make money. The stock can even go down, and I'm still making money. Think about it. Up, I make money. Sideways, I make money. Down just a little bit, I still make money because the stock only has to be above, and I'm making more than 1%. Well, think about it. 1%, 50% a week. Stock goes up, I'm good. Stock stays the same, I'm good. Well, the only bad part about that is, well, I got to hold it for another week. Oh, boo-hoo, I make this money here this week, and then next week, check this out. 18 July, that's tomorrow. 25 July, that's next Friday. 1 August, that's 2 Fridays away. 3 Fridays away. 4 Fridays away. Every single Friday, I can write a covered call against Humana. So here's the big question. Do I like Humana? Do I like Humana at this current price? Because if the stock goes up, well, great, I'm still getting cash flow on a weekly basis. If the stock goes down, I'm still getting cash flow on a weekly basis. Now remember rule 2? Rule number 2, never sell at a loss. It defeats the purpose. If you like Humana and Humana's on your, the high is about $400. The low, but let's say I buy 1,000 shares at $400. Let's say you buy 1,000 shares at $200. Let's say the dividend is 79 cents a share. Are you getting more than me, or am I getting more than you? No, we're getting the exact same amount. Because if I have 1,000 shares, I'm getting 1,000 shares times whatever the dividend is. You bought down here, you got 1,000 shares. You're getting 1,000 shares times whatever the dividend is. We're getting the same exact same amount of money, and we both have the ability to sell a covered call. It's just that where am I going to put my covered call as opposed to where you're going to put yours? Because my risk is if I'm too close to where the action is, well, I bought it up here, now it's down here. Down here is still giving me a nice return. But if the stock turns around and goes back, it's a numbers game. What did I buy it for? What strike price did I sell? Which direction is it going? What is the safest strategy at this moment in time to give me two things: consistency of profitability and safety of my capital, preservation of my capital. That's it. Terribly sorry, it's actually that easy. Or, if you have time for any of these, would you please take a peek? FCX, no. Key, probably not. Coca-Cola, maybe not. STZ, maybe. All right, let's take a quick look. So anyway, I'm going to do Humana first. Let me finish up with Humana first. Here's the high, here's the low, okay? Down, sideways, here we are right here. Let's zoom in a little bit closer, and let me tell you why I said ooh to this one. Now, just like the stock we looked at 2 seconds ago, before this one, it's searching for a new bottom. Tuesday, okay, we thought Tuesday was going to be the bottom. Nope. Wednesday was higher, which meant today we were looking at this and saying we would like it to be higher, but no, it didn't. It dropped back down again. Big drop. Is that right? Yeah. Okay, so today is the new bottom. So again, it's just starting the, what do you call it? It's starting over again. So we're just looking for 2 days to the upside from a bottom. Now this one I wouldn't jump into. Not like the one we saw before with a big gap down and the big drop. Well, with a big gap down and a big drop and that much volume, yeah, you jump in the very next day because it's going to bounce. It's called the dead cat. It's a gross thing, but it's called the dead cat bounce. It came slamming down. Now it's going to bounce back up again. How far? I really don't know. But normally, that's what normal advice is, something like, never listen to someone on YouTube. Do your own research. Other advice I give, never invest real money. Paper trade for a while once you get good over and over again. That's like when you're in the Little League. You young's good at what you're doing to a point where you get onto the JV team. JV team, you go onto the varsity team. That's head honcho. Because you worked hard to get there. Same thing with trading. You start slow. Paper trading, it's kind of like Monopoly. 4 greenhouses, 1 red hotel. You know, that type of deal. Same thing. Buy some stocks, see what it does. If you stick to a certain strategy and just perfect one strategy, and there's so many different strategies. There's guys out there just like me on different channels doing. This one was created for a 9-year-old little girl. Not that girl's with me. Now she says, Daddy, can you teach me? So that's Humana. Just going to sit and wait and watch and wait for it to jump up. Okay, PK. Chandler, what the hell is PK? Just to let you know, Chandler, anytime I say, what the hell is this? It's going to be those are months of the year. There's a big months, and there are 52 weeks. So here's a question. Do you want to get 12 checks, or do you want to get 52? Now, if everything's the same. If I do a monthly option, I'm getting 1 or 2%. If I do a weekly option, I'm getting 1 or 2%. Do I want 12 or do I want 52? It's a simple math equation. It's numbers. Now, I didn't go to college, but I do know 52 is higher than 12. All right? Anyway, PK, no. Sorry, I don't do monthlies. The numbers. Trust me when I say, because everyone me, okay? I want 1% a week. I get that on a monthly stock because I can only trade it once a month. But if you had the choice, all things for 1 or 2% a week, which is over 50% per year. Now, granted, you got to put in 5 or 10 minutes a day into it. Or if you want to do monthlies, you put 5 or 10 minutes a week. Big difference. But the payoff is different. Do you want 12 to 24% at the end of the year? Or do you want 50 to 100% at the end of the year? It's all a numbers game. It's all it is. And what it is you want to do. All right. Let's keep on keeping on. So no to PK. Sorry about that, dude. Weekly dividends as of April. Okay, Dave, I have no idea who pays weeks. There's a big difference. All right, we did Humana. Okay, world you want to live in. Why can't you just come up with state? Wilty, Lig. W-Y-W-T-L-I-G. Tig. Wittig. No, forget it. I'm going to call you Pam. Anyway, let's go. Let's go take a look. FCX. So where is it? Look at the motion. Down, up, down, up, down, up, down. What's going on here? Look at right there. Now you can't see big screen. You can go into the other room, sit in your nice lazy boy or on your couch, kick back, relax, put on the big screen. You make it easier to see these little tiny numbers. You probably can't see these numbers on your phone, but you can on your big screen TV. That's why that's live on YouTube. So wherever you are, just go to the bio, who's in that trader. This is live right now. There's two, that camera and that camera. But this camera down here is just the screen all by itself. And then I'm in a little tiny corner way over there. So you can barely see me. But you can get a better, interesting. Okay, I like this area right here. What's happening? The bottom's here. She shoots up, pulls back. Now she's turning around. Because that's what happens. You get a bottom. Now it's turning around, going back up again. Great. Well, let's zoom in. But before I do, I want to find out, is it going to be worth it? 44.46. The 44.50 is going for a 115. Hell yeah. The 45s are going for 93. Hell yeah. They're both over 2%. Now, depending on where you are in your high teens, 20, some in that area, well, you're just getting started. You got a long way to go. But if you're in your 30s and you're married and you have kids and you have payments and all that stuff, you're thinking about college from the world, whatever. You're thinking about retiring. Well, where's that money going to come from? Think about it. You put it in your IRA or your 4. What are they giving you? Is there an ability for you to be able to take over that account and invest yourself? I have not met a single money manager, account manager, financial planner that ever offered over 30 or 40. Numbers look good. The chart looks okay. The numbers look great. So let's go a little bit deeper. Let's go a little bit deeper. A year ago, we're at 49.73. The high of the year was the end of September, and that was 52.78, somewhere in that area. Now we dropped down to here, TDS day. Okay, and that was 27.66. Now, that's the bottom right there for the year, 27.66. Here's the 90-day top or the 30-day top, so where we are right now. So, from 28 to 48, listen closely, 28 to 48 is a $20 increase. $20, you buy something that jumps up 70 to 80%. Well, here's something you may not know about profits. Number one, it ain't a profit until you take it. Number two, nobody ever went broke taking profits. Okay? So just think of that. It's not a profit until you take it. It may look good on a piece of paper, but until you can spend it, until you can pay the bills, and whatever it is that you're using the money for, this is what I like right here. But look at this. New bottom right there, 2 days to the upside. Let's zoom in a little bit closer so you get a better view of it. Okay, 30 days ago, we're right here at 41. We dropped down just below 40. We shoot up to 49. Now, 40, this is just the last 30 days. Okay, this is just 30 days ago. 30 days ago, we're at 40 bucks. Then we jump up to 40. Think about it. That's a nice jump. Now, she's coming back down. So here's profit taken, new bottom here. 1 day, 2 days at the top, which means tomorrow, if everything looks good, I'm jumping into FCX if I have any money available. Now, I say that because most of my money is invested on Mondays and Tuesdays, which means I have a very small amount of money available for me Wednesday, Thursday, Friday, Saturday, Sunday, because I do all my trading on Mondays and Tuesdays, which means most of my money comes in on Mondays and Tuesdays, and then I pay all my bills, and you know how it is. We're adults, we know how it goes. You get paid, you pay your bills first, or you invest first, then pay your bills. Let's do a practice covered call on FCX and see, do the numbers work? Do I like this company? What is the rate of return for 1 week? So, that being said, we're going to look at the 44.50s. Okay, last price, 44.46. So I'm going to do the 44.50s. Okay, so let's take a look. Get rid of that. Now, one thing I like about Think or Swim, right over here, if I change this right there to a trading strategy called covered stock, it sets everything up for me. Now, remember I said the 44.50s? Here's the strike prices right here. 43, 43.50, 44, 44.50, 45, 45.50, so on and so forth. I want to do the 44.50 right there. Here's the calls over here. Here's the puts. I don't do puts, but they're there. I want to do the 44.50 right there. Right there. So let's do it. 44.50. Right there. So it already presets it. I have mine preset it. Just one. Tell anybody who ever trades with me, I'm great. Now, take your time in doing, because once you hit to that trade, and make sure it makes sense. You ready? Here we go. Buy one. Covered call FCX 100. That means there's weekly options. That's all that means. 25th of July, 2025. That's next Friday. 25 July 25. 44.5. That's $44.50. Well, because you're opening two trades. You're buying, selling the option. That order goes. Selling the option. That order goes. Hitting the right button. I ain't gonna do that. That's childish. I've been trading for over 20 years. I hit the wrong button all the time. Read it out loud. Does it sound right? Just because you think you did it right, there's a lot of times. Now, I have a live trading class in the morning. You would be surprised the amount of times somebody said, oh, damn, I hit the wrong button. So why did you do that? Well, I didn't think I did that. I thought I did. Because you hit the wrong button. It's easy to do. It is. And yes, it does happen. All right. So anyway, here's the trade. Buy one, cover call, blah, 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 blah. So what else is here? What else is here? You ready? Break even, 43.36. So as long as the stock by this date right here, 25 July 25, because that's when this option expires. As long as the stock is above 43.36, I have a profit, regardless of what it is. Okay, so profit can be small and can be big, but the maximum profit is at 44.87. Well, I'm already in a profit. Don't have to do anything. All right, so let's keep on going. 114 is the maximum profit. The cost of the trade, including commissions and fees, 43.36. Think of it this way. I find this to be a lot easier trying to explain it to people. Think of it this way. Being a cash-producing asset, such as a limousine. Some people use those to rent them out. A boat. Some people use those to rent out. Anything that you can buy that's going to produce capital, cash flow. Let's say it's a Coke machine. All right, let's say this Coke machine is going to cost $4,300. Okay, great. $4,300. I got my nice brand new Coke machine. Great. Let's say I put it right outside of the fairgrounds on a weekend. Well, it's got a lot of people there. What am I getting? 114. Well, let's say now I take it and I put it in front of the liquor store. What am I getting? Well, it's a different week. It's a different scenario. You're going to have a different amount of money. So this week, 114. Next, I own 100 shares of this stock. That's never going to change until I decide to sell it. So once I buy a cash-producing asset, whether it's a car, whether it's a boat, whether it's a soda machine, whether it's a laundromat, whatever it is, I have weekly cash flow coming in. Well, it just so happens that my little FX is giving me 100. Plug it in. You got to find a place, and you got to watch it, and you got to protect it from vandal. No inventory, no maintenance. Share 3 publicly, so you can see what every single trade I've done in 3 of my accounts. Okay, I share them publicly. You can see every single trade. Okay, winners and losers. Do I win all the time? No, I don't win all the time. Do I get 1% every single week? No, I don't. But I average over. It's a numbers game. Okay. Here it is. Trades 2025. 10 second quarter, June 2nd to June 6th. Account 1, account 2, account 3. Ooh, I haven't done that one yet. I got to do that one. 2.7, 2.02. Whoops. Week 22. 0.59. See, look, I didn't make 1% there. 2.7, 1.4. 3.8, that kind of offsets that one, doesn't it? 3.8 this week, 0.59, I don't know, average it out, it's more than 1%. But do I make 1.4, so on and so forth? Okay. Only one live on YouTube right now. Uh-oh. Uh-oh. Is that true, Brian? Let's check it out. Only one live on YouTube now. All right. Come on. The third one's a separate. Dividend Stock Talk is that one down there. Okay. So I got 3 channels on YouTube. 2 live right now. Okay, so it is what it is. All right, let's keep on going. Oh, this is what we have. We're here. Might as well show it, right? Screen is frozen. Oh, no. Which screen? Remember I told you I created this for my 9-year-old daughter? Oh, here we go.
Which my dad didn't like me calling it that, but I do. Being part
It's coming. It's my favorite part. That last time I see it. Okay. Anyway, see that? Get out of that. Get out of that. Get out of that. Okay, cool. So here we go. So that's CX. Let's take a look at one more tomorrow. If it's higher tomorrow. So what else we got? Key. FCX. I might do that one tomorrow. I will. I gotta transfer some money anyway. FCX. That was the first one she wanted to take a look at. Next one, Key Bank. Isn't that on Warren Buffett's list? Key Corp. Saying no here is look at your last 30 days. Here's your bottom here. She shoots up, pulls back. Here's the bottom right there. Okay, now are we in a new trading range from 1875 to 18? Well, I went one day right here, which was yesterday. Today's one day to the upside. But look how close you are to the top. Is there enough room for that thing to keep going? It's 1837. Is 2% would be 36, but it's only 34 cents per share. Okay, fine. I like that. Next, Coca-Cola. KO. Ooh, maybe. Let's check it out. Look right here. Tomorrow, then Monday, maybe. Now, I usually don't do Coca-Cola because Coca-Cola has horrible premiums. Right now, it's at $70.59. Well, the 70's going for 9, and I sell it at 70. Well, I'm losing 59 cents. So you take 59 cents off of this, and I'm only walking away with 80 cents. A little bit more upward movement. Because look at over here. Here's your bottom. 1 day the upside. 2 days the upside. Third day, she pulled back. Okay? 1 day the upside. 2 day the upside. Third day, it pulled back again. KE. Sideways down. Sideways 117.52. Hell yeah. Why not? Let's take a look. Here, the end of September was 262.9. Let's call it 263. Okay, bottom note here. 30 days ago. There's your bottom. 30 days ago. Up, down, up, down, up, down. Tired. It's a yes to jump in. For me, you've got to figure out. It's a couple questions to ask. Number one, do I like STZ? Do I like STZ at doing a covered call every single week to get that 1 or 2%? Every single week. Now, when you get, but aren't I supposed to look at the rearview mirror? What about the side view mirrors? What's the gas gauge? It's very confusing when you first start. At a dead stop, stick shift as a new driver. Yeah, to learn about it. And then once you do, well, it becomes easy. So if you take a look at a chart, let's take a look at AT&T. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up, down. What's going on here? It doesn't take long. 2, which is the numbers. What's it at right now? 26.99. The 27 is going for 63. Oh, hell yeah. That sounds great. Okay, it's always going to be about the numbers. Risk reward ratio. How much am I risking? How much I lost defeats the purpose of the game. Because stocks down, up, down, up, down, up, down, up, down. That's what it does. All week, all year, all decade. That's all they ever do. Okay, you can send in a petition letter, say, hey, I would like to have AT&T come to my house, take the dog out for a walk, and down, up and down, up and down. Guess what it's going to do after that? It's going to go up, it's going to go down. That's all they ever do. Up, down, that's it. Just follow it. What makes sense to me? Am I okay buying it and holding it at this price? It's all a simple question. When she was 9, she's not 9 anymore. But, it is what it is. All right. Screen froze. Hate when that happens. Brian Cook, only one live. Okay, thank you, Brian. David and Lisa. What's happening, David and Lisa? YouTube. I feel slightly less dumb after that. Kiddo, all 4 of them looked good. They did. You just got to decide. Oh, my goodness, excuse me. You just got to decide, are they something you want to own for the long term? Do you know everything you need to know about those 4 companies enough for you to feel safe saying, you know what? If I'm right. Either you like the companies or you don't. I'm just trying to get the strategy down. And Gail, good evening, Gail. And look at this. I'm actually saying hi to myself. You gotta get some set of balls for someone using my name and using all my information to actually show up at one of my live shows. Which reminds me, if you want to have a conversation with me, send me your number. I will personally give you a call. If, Snapchat, Telegram, the words come out. I don't do that. You want to talk? Fine. I love talking to people. Put your number in the DM. Don't put it on the screen. Put in the DM, send it to me. I'll give you a call. Really will. All right? It's been working for me, but I second guess some of my choices. Okay. Understood. All right, so let's keep on going. Serenity Galvan. Hello. And how are you? Brian Cook, how are you? Stream is down. Uh-oh, that's not good. Huh. All right, we'll have to talk about that one. All right. Chandler PK, we looked at that one. Emerus. Good evening, Emerus. Coco Jam, what's going on? I could retire now, 1% a week, but I could live very comfortably in Thailand. Can you look at AGF.B? Coco Jam, what the hell is that? AGF.B. Apparently that's not a U.S. stock. It just moved on me. To structure your tax savings, no CPA tax advisor has a clue. You know what's funny? Club Med Tom just. Now, I'm actually going to sign up with the tax strategist myself because I'm kind of curious. I want the tax strategist to take a look at my setup